So we just finished NPV introduction. Now let's do some calculations to explain that net present value NPV concept with the help of numbers. Okay, so we will just create some numbers and see what happens. This is year 1, year 2, year 3. Imagine that you have been given a proposal that if you invest $100,000 today in year 0, you will receive $45,000 for the next 3 years. So your timeline looks like this, that if you put or if you invest 100K here, then you will get 45K at the end of year 1, you will get 45K at the end of year 2, and you'll get 45K at the end of year 3. Okay. So I just assumed some numbers and they asked us to find out the present value of this. Actually, I did one question while explaining the topic for NPV as well, but I just wanted to perform some further calculations and with further explanations. This is year 1, year 2, and year 3. Okay. So how do we do that? We have got this cash flows with us. And what we need to do, we need to find out the discount factor. Okay. And I'm using this Excel table because I will be using this Excel sheet and Excel calculation for further explanations as well. So I'm creating it as a master file, which we will use for other calculations as well. Let's suppose our discount rate is 10%. So if our discount rate is 10%, this is cash flow. And here I need to calculate my discount factor. And here we calculate the present value. And the discount factor formula, as we discussed before, that discount factor is 1 divided by 1 plus I, which is your discount rate. And then you say power n. This is the formula for your discount factor calculation. So if I make discount factor calculation, I'll put equals to 1 divided by 1 plus this discount rate. And then I say power is this year here. Okay. And it gives me 1. We discussed before as well that the year 0 discount factor will always be 1. Even if you increase the number of zeros, you will see that it is 1. And then I have to copy paste the same formula. But if I copy paste, there will be a problem. If you see that the numbers are not coming correct. The problem is that when I copy paste, so here I took this 10% and 10% is E4. Okay, here it says E4. But when you copy paste it down, you take it down, it automatically becomes E5 and E5 is blank. Then you copy paste it further, it becomes E6. So you want that this cell should be locked. And to lock this cell, you need to put a $sign before E and a $sign before 4. So putting a $sign means locking the cell. So either you can type manually $sign here, or you can simply go there, click here and press F4. When you press F4, it puts a $sign before E and $sign before 4, which means that this cell is locked. Now, if you copy pasted this now, it will give you the correct values. Now you see E4 is constant. Other things will change. For example, this was C7, like this cell, N is 0, N was in C7. Here, if you come, it says N is C8, which is this year. Here, N is C9. So Excel automatically changes it. But what it is not changing is E4, which is my discount rate, which I do not want to change because all of the cash flows will be discounted at the same 10%. But I want them that these numbers will change. Okay. So if I see here, it says, C7, C8, C9, and so on. And now I've got my discount factors and I've got my present values. So what is the present value of this cash outflow? You multiply it with this one, you get the number, and then you take it down. And by the way, we don't like these numbers to be shown like this. We put comma like you make it a more organized format. But this one I wanted to show 0, so I make increase zeros. 7513 and so on. Now, this is like the present value of year one cash flow. So the 45,000 which you receive in year one, this one, the present value of this 45 in terms of today is 40,000. This 45,000, the present value, this cash flow, which you are going to receive in year two, this year two 45,000, in terms of today, it is only 37,000. And this 45,000 in year three, in terms of today, it is only 33,000. And then when you make a sum total of these numbers, you get an NPV of 11,908. Okay. So because our NPV is positive, we say that we are going for this project. This project is acceptable. So far, this is a very basic thing, which we discussed before in the previous session as well about introduction to NPV. Now, what I wanted to show you here, the relationship between the discount factor and the NPV. So if I put 10%, my NPV was 11,908. This is what the screen shows you. What if you make it 12%? So if you make it 12%, you see that NPV has changed. So making it 12%, NPV become 8,082. And if I further make it 14%, NPV will be, NPV is 4,473. And then if you make it 16%, I'm just going step by step so that we are taking time to explain and think, because I want you people to, I want to give you time to think as well as I'm doing. So 18%, if I put 18%, so NPV becomes minus 2,158. It is negative 2,158. So what you see now, that as the discount factors are discount rate. So remember, there are two words. This is called discount rate. Discount rate is 18%. Discount factor is different. These are the discount factors. This is the discount rate. So as the discount rates increase, the NPV decreases. NPV and discount rate, they move in the opposite direction. Discount rate increase, NPV decreases. And it continues to decrease until a point where it becomes negative. Now, you say that this project I'm doing, and you say I'm doing, but then in the last you say I'm not doing. And let me just take it down one step below. For some reason, I will explain you. So the same project with the same cash flows, the same project with the same cash flows, it was acceptable here, but it is not acceptable here. It is the same business. A moment ago, you said that, okay, please discount it at 10%. I'm doing the project. Discount it at 12%. I'm doing the project. Discount it at 16%. I'm doing the project. Discount it at 10%. I'm not doing the project. Project is same. Cash flows are same. Whatever goes from your bank and whatever comes into your bank is the same thing. Then why do you change your mind? You change your mind because you are discounting at a higher discount rate. And what impact does it give you? So this is one question in your mind. Now, or it should be a question in your mind. If it was not before, it should be now in your mind. So the first thing we need to understand, what is NPV? The actual question is, where we begin with, what is NPV? Is NPV profit from a business? Like when you said that 10%, so profit is 11,000. Is this 11,000, if I put this 10% here back again for discussion, NPV is 11,000. So is this 11,000 my profit? Answer is no. Is this my cash? Answer is no. You know, investors, they look for two things. You say that, tell me what is the profit, or tell me how much cash I will have. So these are the two things which usually you are looking for, profit or cash. So what is NPV? Is it profit or is it cash? The answer is that NPV is not profit and NPV is not cash. NPV is a relative term. It is a relative term. It explains you that in this particular project, if you invest money in this particular project, I mean, with this cash flows, it will give you $11,908 more than what you could have earned at 10%. I'm repeating it again. This particular investment is going to give you $11,908 more than what you could have earned at 10%. So it's a comparative thing. So you say that because if in my mind, I have my money in my bank at 10% or any other project. Okay, forget about the bank for a moment. I have some other business opportunity where I invest 10% and I take out money from them and put it here in this project. So this project is going to give me $11,908 more than what I was earning at 10%. So it means that NPV is actually that that amount which I was earning plus 11,908 at 10% for 10%. Okay, you said that, okay, that looks good, so I'm doing the project. What if you had invested your money at 16% somewhere? And I say, take your money from there and put it here. So then it is 1065. So it looks like that this particular project is still giving $1,065 more than 16% return. This is one way of seeing it. Or there is another way of seeing it as well. I will explain to you that also. If I say 18%, now it looks like that it is giving minus 2,000. So it looks like that if you had another opportunity where you were investing at 18%, this project is going to give you $2,000 less than that 18% return. So let's not do it. This is one way of explaining or understanding net present value. Another way, which is also a very good way, is that if you remember, what is this? 10%. 10% was your cost of capital. It was your WACC. Discount rate was actually your WACC. So it looks like that you are borrowing funds at 10%, and this project is going to give you 11,000 more than 10%. So what will happen that I will pay to my providers of finance their return 10%, and still I will have $11,908 with me. So that project adds value to the business, because business will invest in this money, make some profits. Out of those profits, we will pay our 10% cost of capital, and still we will have 11,908 in the company. Let's do it. But if I borrow funds at 18%, if my cost of capital had been 18%, my cost of finance is 18%, which means I have to give to my investors 18%. This project is giving me minus 2,158, which means that if I invest in this business, I will not be able to pay back 18%. 2,158 I have to take out from my pocket and put it there and give to investors. I say, no, I'm not taking this project, because this project is not able to, satisfy this cost of capital. So this is the explanation of NPV. NPV is not cash. NPV is not profit. NPV is a relative measure. It's a comparative measure that, if you compare this NPV, like I said before, that if it is 10%, this project is giving me $11,908 more than the 10% required rate of return. The required rate of return. It is giving more. So let's do it. So this is the basic concept of NPV.